folks. Welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, April 7th, 2008. Well, as we get into today's video, I'm going to touch on a few different areas, and you're going to see today in the video that we're adjusting our outlook slightly on the market as a whole and moving the odds and the ratios around slightly. And that's due to changing chart patterns, changing market conditions, changing psychology. So this is an important video in that respect. Now, overall, our outlook on the market hasn't changed. It looks like we are still continuing to set up for a bullish push in the markets, but we are noticing a change in psychological levels here. And we're seeing more and more bulls come onto the markets as we continue to kind of trade over the last 4 days now. Well, today was another consolidation day, so there's no change in that, but I'll go into this more as we go. Today, the NASDAQ was down about 6 points, the Dow was up 3 points, and the S&P was up 2 points. Now, there's really, unbelievably, it's almost unbelievable, but the markets since the high last, I think it was Tuesday when we had the mega push, have really done nothing. Wednesday, Thursday, Friday last week we ended flat, and now again today we see the markets end flat. So the interesting thing is coming to the forefront here is that we're seeing the put-call ratios begin to adjust into the long direction, and we also have to realize that after this week is options X, and whichever way the market is heading into options X, it usually can fluctuate the opposite way. And what I mean by that is that if you have more calls, meaning more people long going into options X, you may see the market dip back down to try and scare some of those call amateurs out of the market. Now, near term, it still looks like we're setting up for that bullish push, and we're not talking again until options X, which is next week. But let's go into the daily chart and the intraday chart as well here. But I just want to touch on this as well, is that as the market consolidates sideways here, we've noticed a change in psychological level for a second reason, and this is very, very important. About 5-6 days ago, or even 4 and 3 days ago, when the market came out with that bad economic news at 8:30 in the morning on like Thursday and Friday, and the markets initially dipped but then recovered to go positive and then close flat, we saw how the sentiment was not letting the market sell off. Bad news was taken, absorbed, and turned into not so bad news. Basically, the market reacted based on how the charts wanted to, showing us that we were consolidating. Now, what's happened today, which we did notice, and you have to analyze this stuff as it comes, is that you noticed the markets were trending up early on no news, and no news meaning no bad news, but then they couldn't hold their gains, and they came back, and the NASDAQ closed negative, and the markets ultimately closed basically flat. So again, we're seeing an adjustment here, how before negative news was actually getting a bounce and you'd actually see the markets push back to flat and move up. Now we're seeing that no news, which is even better than negative news because it's no news, no negative news, is actually not taking the markets up here, which you would have thought based on the trading action from last week. So near term, what we're going to look at, and I'm going to quickly jump over to the daily chart. I just want to show this consolidation pattern because this is a beauty. And we're still looking for a blast off here, but we're beginning to think that there's a small possibility we have a little bit of, you just need to come in a little bit. Adjust. That's all we're saying here. Come in a little bit. Instead of having a sideways consolidation and blast off, maybe a slight pattern to the downside, maybe even touching this 50 moving average, which I did mention in Friday's video, would be a healthy antidote for this market before another move up. So that's the only thing I would like to put out there, and what we at InTheMoneyStocks.com would like to put out there. Just people need to realize that. Realize you have to be able to read all these factors. Not only do you want to read price pattern and time on the charts, but you also want to read psychology and the psychological levels of the market, the bullishness, the bearishness, and so forth, and read how everything is being absorbed by the market. And just a side note, as we get into the daily chart, AMD came out after the bell and said that they were going to cut some jobs and their outlook was not as great and rosy, but the market kind of anticipates that in some respects. And Alcoa, AA the symbol, actually came out with earnings. Let me see if we have any price action. Alcoa is actually trading up after the bell here. I'll show you guys that. Alcoa was trading down into the earnings, which usually indicates a possible bounce. You're seeing Alcoa here trading. It closed at 37.44, trading up 37.66. So really no difference there, up about 20 cents on earnings. And we'll even check on the AMD action, price action here. And AMD looks like it's trading down a couple pennies. So really the market's not reacting too negatively to this. It seems like the market's priced in some of the AMD news and the Alcoa earnings, which seem to be okay as the market's taking it. So in any case, let's jump into the daily chart, the intraday chart here now, because I just want to go over what we had today. What you basically saw today was the market starting out very, very strong. we were gapping up at the open, and pre-market, the ES futures, and those are the S&P futures, were up about 9 to 11 points. And we did see an initial sell-off right down to that 200 moving average. Now, right into lunch, from basically 11 o'clock to about 1 o'clock, you saw a nice move higher, but this is on light volume. Anytime you get into that lunch hour, 11 to 1, and you have a strong move up, you have to be wary of that. You have to be careful because the market can very easily retrace that once volume comes back in. So notice the volume here. From that, on this, you have this basic volume, light pattern, and you have this move up. So that's a divergence there that you want to recognize. You want to see increased volume on moves up if it's going to hold. So in any case, what we're seeing here is a topping out candle, a topping tail, beautiful topping tail. You basically, the second you break below that low, which didn't happen until 2 candles later, see, we touched the low on this next candle, and then they tried to bounce it again, but the following candle took it out. At that point, you saw a pretty hard sell-off, and then we just cut through moving averages left and right. You cut through the 20, the 50, the 200, coming all the way down here before getting a little bit of a bounce at support, and then another sell-off into the close, basically taking all the gains away from the market and closing us flat. So again, keep that in mind, folks, is that the light volume push up, and look at how the volume increased over here. If you took the average volume here, it would probably be somewhere in that general range as opposed to it was right here. And you can see how that sell-off had more volume in it, and that basically takes over control of the day. So there's a lot of factors you want to watch when you're reading charts. It's not just as simple as, well, that's a bear flag or a bull flag, although that is a big part of it. But a lot of people look at the MACD, the stochastic, the RSI. To be honest, guys, we barely look at that stuff. We look at that on daily divergences more than anything to look for swing trade alerts. And they can be a great indicator for divergences. But other than that, you know, to keep me out of a trade, I'll use it intraday. Okay, I want to go short on this stock, let's say, but the stochastics are on the dead bottom. Well, that's probably not a good idea because the stochastics are on the dead bottom. They may be signaling a bounce. Maybe it's not a good short there. So if I'm on the fence about a trade, it can keep you in or out of a trade and go from there. But other than that, we use price, pattern, time. That tells everything along with the psychological levels of the market and understanding how to read that. By the way, guys, we did the webinar this weekend. Fantastic. All right, I just couldn't be happier. The participants, you know, talking back and forth with the instructor Nick in the chat room, and it was just, you know, we talked about so many of these proprietary techniques that you know, it's almost surprising we talk about them. But you know what? They're paying for the webinar. Everyone deserves to get the best, and we try to give that out. We're going to be doing the webinar a week from Wednesday and Thursday night. It's a 2-night webinar, 2 hours each night. So if you can come join, sign up on the website. It's awesome. All right, folks. So let's get into the daily charts now for the last little bit of time. And then I want to touch on some stocks. The daily chart I kind of went over earlier. You still see this pattern. And on the NASDAQ's not a great pattern. This isn't turning out to be as good of a pattern. You saw a reversal today, and this is what I really want to touch on again, is the reversal today where we were up strong in the morning and couldn't hold it. And that's why we're almost kind of leaning now towards maybe seeing a little bit of a pullback here before the next push. So be aware of that, folks. We definitely want everyone to be aware that you really want to see the NASDAQ trade in an angle like this, right into this necktie. If you could have the 50 and the 20 cross and the market come right there, I'd be buying with both hands, all right? I'll just be honest with you guys about that. Me personally, obviously I use stops at all points, but if it came down, the market came down right there into a necktie, very powerful support right there, I'd be buying with both hands, okay? So keep a watch for that, and you know, that doesn't mean we're not going to break out. It's still a bullish pattern, but we're just seeing price action and in stocks and stuff that is a little on the bearish side that may be signaling we need to come in. And what would that price action be on stocks? Well, take a look at Google. Here's the 50 moving average. We pierced it today, pulled back. All right, number one. FSLR. Look at the mega rally. Look at the gap up today, gapped up here, and reversed, ugly reversal on FSLR, along with all the solar stocks, LDK. Look at this reversal right into the 200 moving average right there. Big ugly reversal on the candle. So we're seeing a lot of these reversals in key stocks. All right. Research in motion, ugly little reversal. This may want to come back down here, although Research in Motion had good earnings, so you got to be careful on that one. Apple, big one as well, and we'll get into Apple here. There's the Apple chart on the daily. Look at this little bit of a tail on the top. So this could be signaling another reversal. So my point being here, folks, is that you got to be smart about it. All right. Yes, we want to consolidate here. This chart on Apple, look at how extended this is. It's basically run from 115 back to 160 at the high today, and then it gave us a little bit of a topping tail. Now, does that mean that we're definitely going to drop? No, it doesn't. But it may mean we need to consolidate. This chart needs to consolidate. When you run from $115 to 160 in a matter of 2 weeks on a stock, Would it be healthy to consolidate? Yeah. Do you want to see a little pullback? Yes. If we pulled back somewhere in this range of the 200, consolidated, good. Even if we pulled down to here, consolidated right above the 20 moving average, that would be good. So my point again, guys, is that keep this in mind, is that a lot of these charts are showing us some pretty nasty reversals today in the market, and we have to be aware of that. You have to be reading those as a signal. All right, let's look at the NASDAQ again. We saw a little bit of a nasty red candle here where we gapped up, and you closed down on that daily chart as well. And again, I pointed out that maybe we come down into this necktie. And again, it's all about putting the odds in your favor. We're all about putting the odds in our favor. We're not 100% right, but we just put the odds in our favor, hope for the best, and then we keep a tight stop. And more often than not, you guys know our calls are dead on, 100% dead on in most cases. Come join the Swing Trade Alerts. Do the webinar when it comes up again, guys. Huge. It's coming up in 2 weeks, so sign up now. Come join the Swing Trade Alerts, the E-Mini Intraday Stock Chat, the Options Alerts. You won't be disappointed. Take care.